Hello, everyone, and welcome back to the 2018 Hack Summit. We're joined here by Olaf Carlson-Wee, who's the founder and CEO of Polychain Capital, which is the largest early-stage hedge fund / venture fund that invests in cryptocurrencies. And he kind of paved the way for a lot of other venture funds, including my own, that invests in early-stage startups in the blockchain space. And Olaf is also formerly an employee of Coinbase, where he was the first employee there who he helped oversee the risk areas of Coinbase. And his fund is backed by notable other venture capitalists, such as Sequoia Capital and Andreessen Horowitz. And Olaf, it's a pleasure to have you here today. Thanks so much for taking the time out of your busy schedule.
Yeah, thanks for having me, Ed.
Great. So we're just going to have a really kind of fun, free-flowing conversation with Olaf here. If any engineers in the audience there are thinking about maybe someday building a blockchain startup, or if you already have a blockchain startup and you're thinking about maybe raising money for it, this is going to be the session for you, because this is the chance for you to learn from a super experienced investor who has made tons of bets in this space and learn about what he looks for in those opportunities and how you can position yourself to have the best chances of success. So this session is for you, engineers in the world. And Olaf, if you want to ask the audience questions, we can poll the audience too. We can ask them questions, and they will, I'm sure, ask us questions as we go. So why don't we start off by just having you introduce yourself to the audience. So maybe tell us a little bit more about your background, how you grew up, how you got into this field, how you got into Bitcoin and blockchain and cryptocurrencies. Want to start there?
Yeah, sure. So I grew up in northern rural Minnesota. If you've seen the movie Fargo, across the Red River in Minnesota, there's a town called Moorhead. That's where I grew up, and I went to school in New York, went to my undergraduate university there. And it was there that I found out about Bitcoin. This was about the summer 2011. And so I was going into my senior year there and decided to write my undergraduate thesis on Bitcoin and cryptocurrency. So I completed that thesis. Then it was about mid-2012. I worked for a while as a lumberjack in northern Washington state near Lake Chelan. And lived out in the mountains, and then found Coinbase. I was one of the very early users of Coinbase, and so applied for a job there. Joined Coinbase as the first employee in early 2013. Was there for 3.5 years, doing various roles. I was the head of risk for the majority of my time there, and then left Coinbase to launch Polychain in mid-2016. We had about $5 million under management. And kind of launched this out of my bedroom. We've grown substantially since then, and yeah, it's been a wild ride and a lot of fun. Cryptocurrency never ever fails to have a dull day.
That's an incredible story. So going from a lumberjack to being an employee at one of the hottest blockchain companies out there, Coinbase, to running your own venture fund, which has done very well for itself. That's not a normal career path for most people.
Yeah.
Right?
Well, this is one of the cool things about the cryptocurrency space is, there's not this kind of entrenched elite, right, who control it and are the gatekeepers to it. Additionally, everyone is self-taught, right? You can't really, maybe this is changing a little bit, but you can't really go to school to study cryptocurrency. There's no certificates or diplomas that can help you here. Everyone kind of has to be a bit of an autodidact and go figure it out for themselves, and also create opportunities for themselves. This world is, the cryptocurrency world is very decentralized, extremely global. And a lot of the culture, I think, is kind of going out and finding opportunities, creating value, rather than your more traditional, job application kind of way to get your foot in the door. So just in general, I think it is kind of a little bit of a Wild West still, although it's becoming more and more kind of mainstream. And I think that, it's something I really just enjoy about this whole industry.
I do too. And I think it's kind of like a lesson learned in life here is that when you've got a chaotic situation where nobody really knows what they're doing and it's a brand new situation, that can be scary to a lot of people. But if you're opportunistic and entrepreneurial, you can take advantage of the chaos.
Yeah.
And build something, right? Where everyone else is scared and trying to figure it all out. Someone has to put a stake in the ground. And that's kind of what you did. So how did you get that job at Coinbase? You're a lumberjack, and I'm sure the resume looked kind of weird to them, right? So how did you land that?
I cold emailed jobs at Coinbase, and I attached my undergraduate thesis, which had this kind of chapter, on cryptocurrency, along with other kind of cryptographic technologies like Tor, and so I attached that, and I basically said, I just graduated. I'm really, really into Bitcoin, and I'm willing to do anything. I didn't have any illusions that I had zero work experience. The top line of my resume was that I operated chainsaws. And so it was, I think it was a long shot. I think I got lucky, honestly. But I also connected really well with Brian and Fred, the two founders of Coinbase. And to this day, we're really good friends. And I think that, at the end of the day, you have to take those kind of shots sometimes. So it was kind of odd. Like, I didn't get an introduction or anything, but they needed help with customer support. And like I said, I was willing to do anything. So when I started at Coinbase, I was handling customer support, and I was really the only customer support agent they had. We scaled from about 50,000 to about 250,000 users throughout 2013. And I was the only customer support agent the entire time. So it was a grueling job. But then, that opened up a lot of opportunities, because the company grew from the three of us to maybe a year and a half later being, closer to 100, I think. It scaled very, very quickly. And for those of you that were around in 2013, cryptocurrency was just exploding from nothing to something at that era. So yeah, that was a really wild ride. That's where I learned a lot there as well.
Mm-hmm. And tell us more about your thesis that you wrote on Bitcoin. What was that thesis about?
Yeah, so this was a sociology thesis. So I was writing a lot about the implications of the mass adoption of peer-to-peer technologies. Particularly focusing on cryptocurrency and exploring what the implications would be. So I talked a lot about how cryptocurrencies or internet-based monies could compete with state-backed currencies in the long term, and how this peer-to-peer financial system that's opt-in may end up being a better kind of store of value or type of money for your average person who really doesn't want to peg themselves to a specific geopolitical system, but rather wants to actually use an internet-based money. So to me, there was just, cryptocurrency was very, very obscure in 2011. I think there were probably about 50,000 global users. I don't think this was a big phenomena. But, even in those days, there were some really, really interesting kind of philosophical properties that this opens up. What happens when you can create financial systems on a permissionless network? Like right now, if you want to create a bank or you want to create a financial exchange, you have to do that in a jurisdiction. You have to do that through legal entities. And very similar to the way the internet created a platform where anyone could build anything with no permission. And it's because nobody owns the internet, right? It's a peer-to-peer architecture. I think very similarly, now you see peer-to-peer financial systems being built, again, on an architecture that nobody controls. Just like nobody owns the internet, nobody owns the blockchain, right? So as we see these more advanced kind of smart contract systems be built and more experimental types of monies be created, it's really all possible because it's built on this permissionless backbone. So I was writing a lot about how this permissionless peer-to-peer backbone would eventually create fully peer-to-peer financial systems that would eventually compete with really state-backed monies and central banks and things like that.
Mm-hmm. And why did you end up leaving Coinbase to start your own venture capital firm?
So I had been at Coinbase for 3.5 years, and the company had changed a lot throughout that time. I have a little bit of like a maverick attitude. I like when things are really small and really scrappy. And so Coinbase really had scaled into really a proper large scale firm. It had about 200 people when I left. And, I really like doing things that I view as extremely high leverage. So when Coinbase was 3 people, everything I did had a massive effect on the outcome of the company. But with 200 people, it's harder to retain that kind of leverage. So I wanted to do something that I felt could propel cryptocurrency forward more aggressively, and where I personally would have higher leverage over crafting the development of this space, and ultimately do what I've always wanted to do, which is just accelerate getting people into the cryptocurrency world. The goal with Coinbase for me was to just sell Bitcoin to millions and millions and millions of people, which they have really done. When you ask your average person, how do you get your first Bitcoin? A lot of people say Coinbase, and I'm really proud of that. But to me, towards the end of Coinbase, I saw these really interesting trends in a little bit more exotic technologies. So you saw Ethereum launch in late 2015 and start growing, and I was really paying a lot of attention to that. And people were starting to build things on Ethereum that had been, we'd been thinking about trying to build things on Bitcoin for a long time, like, for example, meta assets or tokens. And what I mean by that is, the blockchain ledger of Bitcoin really only supports Bitcoins, the currency. There's no other assets that are being created and distributed using this Bitcoin software. And so then with the phenomena of ERC20 tokens on Ethereum and ICOs, I started to see, whoa, Ethereum is really fulfilling this vision of multiple assets all being secured by a single blockchain. And this is something that in Bitcoin, there were attempts like Mastercoin, Colored Coins, Counterparty to build this, and they had really all fizzled out, like none of them had worked. So I started seeing that those types of things emerge on Ethereum. I started to see other types of things that people had been thinking about for a long time, like stable coins being built on Ethereum. The MakerDAO project was really in full force, even back in 2015, 2016. And I started thinking a lot about, why is this happening on Ethereum and not Bitcoin? And when I understood that, these different blockchain protocols can truly have different trade-offs, where you can't have it all, and by opening up to a Turing complete scripting language, you perhaps open up certain security risks, but you also open up a lot of flexibility for application developers to build more advanced financial contracts on top. So to me, I was seeing all that happen, and Coinbase acts sort of like a Bitcoin brokerage, right? It kind of sells cryptocurrencies to people, but it doesn't interact with these networks in more exotic ways, right? Like Coinbase isn't really involved in writing smart contracts, or it doesn't really care per se about smart contract development or what types of new things people are building. So to me, there was just this big wave happening in kind of like late 2015, 2016. And so I got really interested in this and decided that there was a big opportunity to create, a portfolio approach to investing in cryptocurrencies. Because up until that point, it was really common sense and really empirically the best investment strategy to just hold Bitcoin. And throughout, most of like 2014, 2015 era, a lot of altcoins, quote, were basically scams. And the ones that were attempted really didn't get any traction. So to me, that was changing, like the tide was changing. And so I did see kind of a market opportunity to do something that I felt was very high leverage and could help propel cryptocurrency forward. So all of those kind of inputs went into the decision to leave and start Polychain.
And did you ever think about starting your own blockchain startup as an alternative to investing in other blockchains?
So, the people who create truly breakthrough architectures here are really special. Like, I think that I didn't have an idea there, right? Like I was at that time reading like the Tezo's white paper, say, and I was pretty blown away. And I'm pragmatic, and I knew that I was good at investing in these projects and identifying what was really technically interesting at an early stage. I don't think I should be building new consensus mechanisms, say. And so while I did think about what other types of projects I could start in the cryptocurrency space, this one was a way better fit for my skill set.
Mm-hmm. It's the age-old wisdom of know thyself. And it sounds like you got there pretty pretty early.
Yeah.
So you've got this fund now, and tell us a little bit more for the engineers in the audience about kind of how what is it that you look for when you invest in a token pre-sale or in a cryptocurrency? Like, like what should the engineers in the audience be thinking about to prepare themselves to be fundable in this environment?
Yeah, so I think we're really looking for new technologies that unlock kind of novel use cases. So with my example of like Ethereum scripting language, that genuinely did introduce this concept of multiple assets on a single blockchain. It introduced this, these smart contracts that can facilitate things like stable coins, things like peer-to-peer loans enforced by a smart contract. And so we're looking for what new technologies will unlock those types of novel behaviors. So really interested in governance projects. So things like the MakerDAO, which is basically a decentralized central bank. I know that's a little silly to phrase it that way, but it's basically a decentralized a DAO basically that will vote on the rules of the monetary system of the stablecoin, which it governs. And so the Maker token really acts as a governance coin that allows the holders to actually vote and actively participate in the way that stablecoin system is built. So what the rules are, right? What are the collateral requirements? What's the interest rate? All the kind of things that normally would be determined by a central bank are now determined by a decentralized group of token holders. I think those kinds of experiments are really interesting. In addition, things that have these on-chain governance mechanisms, so projects like Definity, projects like Tezos, I think that the concept of on-chain coin voting is really, really interesting. It's not to say that this is a silver bullet or I'm confident we'll solve every problem, but I do think we will see really exciting things come out of that. So that's another kind of area that we've historically looked at very closely. I think in addition to this, it's something we often refer to internally here as meta protocols. These are kind of like helper systems that can help smart contract developers build things that are a bit more advanced, right? So things like Oracle services, which feed data that's not endogenous to the blockchain into smart contracts. Things that can feed, say, an API key into a smart contract. These are seemingly sort of simple problems, but they're actually really, really complicated. And then all sorts of like financial infrastructure that's built using smart contracts. So we were early investors in the 0x project, and that has turned really into a whole ecosystem of people building on top of the 0x protocol in order to build peer-to-peer loans, peer-to-peer options contracts. Like the DYDX project is really exciting to me. People are building money markets. So like Compound Finance is building that using smart contracts. This is all part of building not just peer-to-peer money, but an entire new peer-to-peer financial system. And a kind of also a governance model for these basic kind of financial primitives, like who determines the rules or interest rates and things like that. So yeah, that's kind of a whole swath of things. I'm not thinking of everything all at once in this moment, but I think anything that is really a hardcore experiment that enables new behavior. Like we like to back things that seem very exotic, because I do think the future is a lot weirder than most people think. And I think if you just look historically at the story of cryptocurrency over the last 9 years, this is by definition like, it's such an unpredictable phenomenon. And I think it will continue to be extremely strange, like the experiments we see happen. And I think the way things are growing, you'll never be able to predict this. And so betting on things that are extremely exotic and experimental is very much in our wheelhouse.
That's well said. And so when a team comes in and pitches you, what are some of the questions that you might ask them to help vet whether it's the right opportunity for you to invest in for that particular team?
Mm-hmm. So we think a lot about what more and more has been called like a crypto economic system. And this is basically the incentive structure presented by the projects in order to achieve whatever they're trying to achieve. So for example, in Bitcoin, the kind of crypto economic system is that miners receive blocks, and as a result, lots of miners come online and hash. And because of that, it's very hard to tamper with the blockchain ledger. So you get the security guarantee that you want by creating a crypto economic system that's mining in blocks. However, I think a lot of experimental and interesting projects right now are trying alternative crypto economic systems. So what are some other ways we can incentivize actors in a peer-to-peer network in order to produce some other result other than, say, security of a blockchain ledger? And so to me, we dive a lot into this crypto economic systems. We often call this jamming. So we kind of, because it's very multidisciplinary, right? There's some part of this that's kind of game theory, some part of this that's sort of cryptography. Need to have an understanding of the peer-to-peer layer, distributed systems. So that, I think we often get people with kind of different expertise and different perspectives in a room and kind of just jam on these crypto economic primitives and crypto economic systems. That's a lot of fun for me and for everyone at Polychain. I think that's what we spend a lot of time on with the teams we're talking to. Other than that, though, a lot of our questions to an early stage team would be maybe similar to what you'd think about like a traditional early stage venture company, right? Why are you doing this? What do you want out of this? I care a lot about motivation and people's kind of reasons. Like I want people to be doing what they're passionate about. And you will always lose to someone who is more passionate than you about what you're building. It's very hard to compete in an area that you don't truly care about. And starting a company is a lot of blood, sweat, and tears. So if you don't really care and really believe in what you're doing, it's going to be really hard to compete with the people that do. So to me, we ask a lot of questions like that. And, I also think that thinking about the vision, like, do you have a solid understanding of the kind of market landscape that you're launching into, and how this will be received by the market? Where does it fit in the market? It's really, really important to know those things before you get started on something, because you can work really, really hard on the wrong thing and get nowhere. Like if you get strategy wrong, nothing else matters. Mm-hmm. So we think about those kinds of things, and I don't think that's unique necessarily to cryptocurrency projects per se.
And so in the cryptocurrency space, given that a lot of the investments that you've made and the rest of us have made have been kind of in pre-launch projects where they haven't necessarily gone live yet, how in your view can a team de-risk product market fit and show that they're actually solving a problem worth solving, given that they don't have any traction and they're not in market yet? To your
So funny thing about product market fit in cryptocurrency, it's like, oftentimes what we're looking at are lower level protocols that will enable exotic things that we cannot imagine. And I know that sounds hand wavy, but I don't think anyone building Ethereum could have in their wildest dreams imagined what has happened with the Ethereum protocol. The fact that, to my knowledge, recently there has been moments where there is a higher volume of non-Ether assets being transacted on the Ethereum blockchain than Ether itself, like more tokens being transferred than Ether. I don't think anyone would have guessed that was really like this killer use case that came out of Ethereum. And I think that, the whole point of this is to build extensible protocols and tools that can enable things that you really can't imagine. So to me, that's something very beautiful about what we do, is we get to be very imaginative and keep an extremely open mind about what could be built here. But this is where product market fit is a little bit of an odd question, because nobody knew there was a market for, say, the concept of an ICO before ICOs even existed, right? You're building Ethereum, you're building an underlying tool or system that unlocks all of these use cases and all of these markets that didn't exist before. So to me, like, especially with these lower level protocols, I wouldn't call it product market fit. It's more like a really good extensible technology that we think can draw in a community of developers, and also just generally a kind of gut feeling, really, that this is going to, by virtue of its technology, enable things that we actually can't imagine today. And I know that sounds a little hand wavy, but the future is going to be really weird. And I think in 5 years, no one today can predict what that's going to look like.
Yeah, it's almost like you're embracing the chaos, and you're not trying to know everything. You're embracing the fact that you don't know, and you're okay with not knowing. And you're saying, I'm going to bank on the fact that I don't know the answer, and I'm going to bet on that, basically.
Yeah, exactly.
And I guess some of the risk that you run there is that you might be investing in a few solutions that are looking for problems to solve, and some of them might not find problems to solve, right? They might search for a while, and there might not be a deep problem there that's worth solving. But for those that do succeed, they could succeed in a wild way, like Ethereum has. Right?
Yeah, and such is the nature of venture style early stage investing. We're actually allowed to be wrong a lot, as long as when we're right, it's a really big impact.
So when you invest, you're specifically looking for teams that can make a big impact. A small improvement to blockchain is not interesting to you. Is that right?
Yeah, I think in general that's very fair. I think more and more the landscape of competition within cryptocurrencies, and also cryptocurrency companies that are built on top of these protocols, it's quite competitive, and incremental improvements really aren't enough to win mindshare in the current environment. It really needs to be a radical re-architecturing and radical new ideas. So to me, yeah, I think you see more and more projects that are doing more subtle or incremental improvements, instead of creating a whole new blockchain, are actually more and more selling their technology to an existing layer 1 blockchain project in exchange for tokens. So this kind of tech for tokens or code for coins model, I think, is becoming very popular. And this looks more like a traditional equity investment, right? From our perspective, we're investing in a startup that is actually going to go generate revenue for itself, rather than a peer-to-peer network that will grow through network effects. And so that revenue generating entity is still building very low level blockchain protocol type code, but it's just selling it to other existing projects rather than launching new blockchains itself. And part of the reason that trend has emerged is because this space of layer 1 blockchains has become so competitive.
So let's say a team comes out and pitches you, and they're working on something exotic, and it's pretty exciting to you, and it's a wild, crazy idea, and it has that chance of really being a breakout, and you love the team and you love the idea, but when it comes down to their token and their token economics, there isn't really a great reason for the token. And you might sometimes worry, could token velocity hit them someday, and could their token be worthless someday? Is that a concern that you have, and is that a question that you ask, and is that something that you worry about or factors into your decision-making process?
I will tell the team very directly, do not create a token. And I've done this for dozens of teams. If there's any level of uncertainty, it's okay to start a normal, equity style startup, and put the question of, is the technology we're building fit for a crypto token to the future? But however, in general, in my experience, if there's uncertainty, the answer is probably no, that a token does not make sense, and that you should think of trying to generate revenue like a more traditional company. So yeah, I actually think that there are a lot more tokens out there than make sense. I don't think it's a surprise to anyone in this ecosystem that there's just a lot of nonsense and white noise out there. So yeah, I try to be very honest about that type of feedback.
And I've also noticed in this market that there's a large number of entrepreneurs that have attempted to build businesses in the traditional way, and then they fail, or they struggle, and they pivot, and they still struggle. And then they look at the fundraising environment for token pre-sales and for ICOs, and they take advantage of that. And they try to be opportunistic and say, I'm going to raise capital through tokens, and that's going to be my pivot. And I'm sure that you must have seen this as well, that the activity in this has increased over the last year or two as the public markets have become more and more frothy for investors. And so, like, how do you sniff that out when you're looking at a team? Like, how do you tell if a team is truly devoted and truly is building their blockchain projects for the right reasons, and is not just doing a desperation fundraise and embracing tokens just because it's opportunistic and it's the flavor of the month, essentially?
Yeah, and I think that trend really peaked in late 2017. Like, I think you're seeing fewer teams do that now. However, this is where, like, you can't just pivot into a good crypto economic system. It doesn't work like that. These things are really complicated and finessed. I think that in general, it's really easy to kind of sniff out who's just going for a cash grab, so to speak. And entrepreneurs will always be entrepreneurs, right? They're going to hustle and try to make their idea work by any means possible. So I think that in general, though, it's really easy for our team to kind of sniff those out.
That's great. And so, a lot of our audience members here own tokens, and they've never met the teams before, like you have. You're making very informed investment decisions based on due diligence, reference checks, maybe reading the white papers, having an engineering team that you employ also read the white paper and pick it apart. The investors in the audience, the retail investors, the engineers out there who are passionate about this, they don't have access to those resources. And yet they're still making investment decisions for themselves based on what they're reading on websites. Is that safe? And how can these folks make informed investment decisions for themselves?
Yeah, so I would say that investing in cryptocurrencies is not safe by default, particularly if you're investing in anything kind of smaller or more emergent. I think that a lot of information, though, can be portrayed literally just in the code, right? So there are a lot of projects, for example, where a lot of the lead developers are just totally anonymous. And I've never met them, and nobody else has ever met them. Monero, for example, I think has a large swath of their dev team is anonymous, and I think there's a lot of projects that operate like that. So to me, if you actually like download a node, try to sync the blockchain, generate a transaction, create addresses, you'll get a sense of if this software is kind of well written and legitimate or not. So I do think a lot of information is kind of publicly available. Now that said, getting to meet the team does give you a bit more insight into motivations and things like that. But in general, we invest in a stage when it's very, very early, very emergent, and there really isn't a liquid kind of traded asset anywhere. And the reason we do that is because getting to the point where you're launching a liquid traded cryptocurrency asset, if it's a really ambitious project, that's a lot of work. So we like to fund really early stage teams that dream of doing something like this, but it will take anywhere from 6 months to a couple of years to actually launch the project.
Makes sense. And when you look at these teams, what's organically attracting a lot of entrepreneurs and engineers to the blockchain is that it's kind of the combination of many interesting things at once. It's game theory, it's software development, it's markets. It's very appealing to the geeks out there, including myself. And I've noticed that there's a number of teams out there that are software developers. So they have an engineering background, they have a computer science background, maybe, or a quant programming background, but they may not have business experience. So they may not have actually run an organization, been a manager, sold to customers, done marketing, done evangelism, anything like that. Is that important from your perspective to be successful when you're building one of these blockchain projects?
Yeah, I mean, it helps, absolutely. Just having that certain level of hustle and knowing how to get in touch with the right people and think strategically about the order of operations for what's truly important to get done versus what would just be nice to have. All of those things you learn running a business, and I think it's all helpful. Now, that said, we really are in kind of a new environment where it's very, very hard to have any experience running a cryptocurrency business when this whole area is just a few years old. So to me, you know, if you are kind of a first-time founder or first-time entrepreneur, you're faced for the first, you know, you're faced with a space where that's totally the norm, because nobody really has, you know, multiple successful businesses in cryptocurrency under their belt, other than maybe Eric Voorhees. So to me, it's a great opportunity actually for first-time entrepreneurs, because everyone sort of is doing this for the first time.
Mm-hmm. And so if, let's say I pitched you and I said, I figured out this incredible algorithm for consensus that's better than the status quo, and it's Byzantine fault tolerant, and it runs with low network usage and a bunch of other things that we love. And then you ask me the question, how are you going to bring this to market? And I say, I don't know. I don't know how I'm going to bring it to market. Is that a red flag in your view, or do you think that can be improved or augmented over time? Is that something that still makes me investable?
Yeah, I mean, I think that, you know, I don't expect one person to have every skill, right? So oftentimes, like, a really good team can be a technical architect and a hustler, right? And you can find one person who's really building the thing and one person who shields them from everything else and figures out how to, you know, drive a bit of an ecosystem, drive a community around the project. And that can be a very, very different skill set. So my advice to you in that case would be, you know, find someone who's really got a complementary skill set. You don't want to find someone who has your skill set again, right? You don't want to duplicate yourself. You actually want to complement yourself and find someone who's very, very good at things that you're not. The troubling thing is it's often hard to assess someone's skill when they have skills that you don't have. If you're an excellent developer, you can interview other developers very easily. It's hard to interview a business development person and tell if they're good. So you know, it is tricky to build that early team, right? And those early hires are very critical because they'll be hiring other people in their skill set, right? But yeah, I think it's about building a well-rounded team. If you feel like there is a bit of an imbalance in your personal skill set.
That's well said. I think Paul Graham also kind of made a comment on this, which is that if you look at Y Combinator and how they invest, they specifically invest in technical founders, because Paul Graham has a theory that you can always teach a programmer how to sell, but it's going to be pretty hard to teach a salesperson how to code. And so yeah, the first direction is a lot easier than the second direction. That's at least his thesis.
I mean, I totally agree with that. Mm-hmm. I mean, if you don't have, like, okay, let's put it this way: if you're a technical architect and that's it, versus you're like the business development hustler, but you don't have any technology, right? You know, the first one obviously has a shot, and the second one does not.
Mm-hmm.
Yeah.
Although I will say that the best salespeople can sell a product that doesn't exist, just based on a slide deck.
Especially in the cryptocurrency world.
Well said. Let's go to the audience, take a few audience questions, then I'll circle back on a few other topics with you, Olaf. So Eric Bollinger asks, why would anyone continue to invest in proof of work blockchains when a system like Hashgraph is more efficient in terms of transactions per second and energy consumption?
Yeah, so I think with every consensus mechanism, there are trade-offs, right? So proof of work has a long history of actually working, right? Bitcoin's been live for a long time. There hasn't been successful 51% attacks at scale against it. So I think proof of work is still today by far the most kind of proven system. In order to achieve a certain level of kind of transactional throughput, you often have to sacrifice some other feature of this network. It's not to say that one is better or worse. It's just that there are real trade-offs here for the use cases, you know, and some might be better for different use cases that developers have in mind. So for example, in a system like Hashgraph, it works a bit more like, say, a Ripple or Stellar style consensus mechanism, where you have a more trusted validator set, a smaller validator set, and therefore you have the ability to have much faster blocks, faster transactions per second, better transactional throughput. but you may also struggle with other sorts of challenges like collusion between the validators. You can get cartel formation in those kinds of systems. You can also have security problems, like if individual validators are huge risks to the network, if they're compromised, that can be a bad thing. You have compliance and offline risks, right? If all of those validators are in one legal jurisdiction in the real world and are shut down simultaneously, would that stop the network from operating? You know, so you open up all sorts of other types of risks and problems by moving to a faster, more centralized validation system. So to me, it's not to say one's better or worse, but there are real trade-offs every time you make those types of decisions.
Thank you, Olaf. Next question comes from Ian. What is your current view on Tezos and how it's changed over time?
Yeah, so I first met Arthur, the creator of Tezos, in 2016. And I think we were kind of the first investor in the Tezos project back in 2016. They just successfully launched the main, you know, they're calling it the beta net, but it's really like a live blockchain where balances will carry over to the main net. So it's real money. Let's put it that way. It's live. They launched that about 9 days ago. It's been really reliable so far. There haven't been any uptime issues or, it's really been, I've been very pleased with how the network's been performing so far. I think that Tezos is a great example of a project that is really amazing technologically. In my opinion, for kind of a layer one blockchain, Tezos is probably the most exciting launch since Ethereum. For me, but I do also think that it experienced massive offline problems. It's kind of ironic that this on-chain governance blockchain like Tezos experienced such large off-chain governance problems at the kind of foundation level. So to me, it shed a light on, and it taught I think everyone in the space a lesson that off-chain governance and organization is actually critical in order to launch a successful cryptocurrency project. So I actually think that I'm very, very optimistic about the Tezos network and technology. I think that it's kind of something that hasn't had a lot of marketing dollars behind it, I guess. But I think that the tech is real, and I'm very excited to see what comes out of like the Michelson scripting language that Tezos uses, as well as the on-chain governance system and the delegated proof of stake consensus mechanism that Tezos has. So I just think that Tezos is a really exciting launch, and we're going to be following its progress closely.
Great, thank you, Olaf. We'll come back to the audience in just a second here, but a couple other topics here in terms of blockchain trends here, Olaf. So we've noticed here at Hack Summit, we have quite a few speakers that are proposing new scalable ways of consensus that kind of take some of the scalability challenges that we're seeing with Ethereum and Bitcoin to the next level. And I've seen quite a few solutions even outside of Hack Summit that are being proposed as well. First of all, do you think that Ethereum kind of has too much of a head start already for next generation smart contract platforms to kind of compete, given that there's such an enormous ecosystem right now around the ERC20 token and the developer mindshare that it has? You look at projects like Origin, for example, that's built on that. If I'm building a new project and I want to get into market quickly and have a fast time to market, I'm probably going to pick the blockchain that not only just the most scalable, but the one that gives me the most other picks and shovels that I can use to create my solution, like something like NuCypher, for example. And so does that give Ethereum too much of a lead and too much of an unfair advantage for the others to realistically catch up? What do you think?
Mm-hmm. So a lot of people ask me this about Ethereum, referencing Bitcoin in like 2015. Ethereum launched, doesn't Bitcoin have way too far of a head start? Like, people are working on colored coins. And I think the reality is Ethereum has a massive head start, right? And it has huge developer mindshare. I think the tooling around the Solidity language is very good. You have, really usable wallets, usable interfaces. You have thousands of experimental applications being deployed on Ethereum. So to me, yes, like Ethereum has a huge head start. But that said, oftentimes with these more experimental proposals, it's much easier to start fresh than to try to convince the entire Ethereum community of node operators and miners and core developers that a certain architecture is better and to move to that. So I think that it's a similar issue that incumbents have versus startups, right? Very large corporations have incredible resources. They have huge market penetration, but yet startups do work sometimes against all odds. And so to me, I think that while Ethereum does have massive kind of market share, I think that in the next 5 years, we will see many things grow very, very quickly that offer kind of, again, different benefits, different costs than Ethereum does.
Mm-hmm. And for some of the investments that you make, does it ever come up in conversation about whether another blockchain could theoretically fork them and borrow from their innovations to kind of reduce their defensibility at scale? And is that ever a concern in your mind?
Not really, because when you fork a blockchain, you don't steal the users. And all that matters when you fork a blockchain is what the market cap of the fork is. And the kind of winning fork is the one that has the higher market cap. And so you really have to win over the users, in order for that fork to be meaningful. And that's really, really hard. And so, I think in general that the defensibility here is network effects, right? It's not like patents or something like that. And the blockchains have very, very powerful network effects. I mean, the tribalism in the cryptocurrency space and the kind of fanaticism around cryptocurrencies is a testament to how powerful network effects are when the users of the network are the owners of the network. So to me, there is, I don't worry about forking, causing a problem. I actually think forks allow more people to represent their views in the market. So net probably result in a kind of more efficient market where more people can represent their views. But yeah, I'm not worried about that. And I think that defensibility is in network effects, not in like IP or patents or anything like that. The other thing I would just broadly say is, this whole space, it's still so early. This is not like a zero-sum game of competition for one pie. Like the pie is growing. And to me, did Ethereum compete with Bitcoin? I would really argue that Ethereum opened up a whole suite of use cases really outside of what Bitcoin does. And I think that a lot of people, still like Bitcoin for the fact that the protocol will never change. There's not going to be any backwards incompatible forks, that it's an excellent store of value with a long track record. So to me, it's just not a competition between all these protocols. It's really about opening up new use cases for people because existing technologies maybe didn't support what they had in their imagination.
Mm-hmm. Makes sense. There was recently an article that Polychain Capital wrote that I thought was pretty interesting, which was kind of on the subject of forks and how there's probably going to be a set of folks down the road who are not creating new technologies, but what they're doing instead is they're devising novel new go-to-market strategies. So they are extremely good at going to market, getting distribution, and thinking of new ways to do that haven't been thought of in the past. Is that interesting to you as an investor? No new technology, just a fork of existing technology, but the go-to-market strategy is incredible.
I mean, you're talking about, in a sense, like these coins that have excellent marketing and very little beyond that. I won't name any names, but I think we all have an idea of what these projects are in our head. That's not interesting to me at all.
Mm-hmm. Fair enough. Let's go back to the audience and get some more questions answered. So let's see here. So we'll answer a question by Mies and Pace, which is, does Polychain fund nonprofit initiatives for open source blockchain development, especially when the token in question does not have a token for obvious financial return?
Yeah, so we did make a significant contribution to the Stanford Center for Blockchain Research. This is a nonprofit group run within Stanford, exploring the technological, economic, legal implications of cryptocurrencies. I think a lot of the biggest innovations we've seen in the cryptocurrency space have really come out of Stanford. And so really excited to support that effort. It's really the first type of thing we've done like that, where we contributed a grant to a nonprofit organization simply to just support broad-based development of cryptocurrency technology. I could imagine us doing more things like that in the future.
Thank you. And then Eugene asks, do you think that we can get to a $5 trillion market cap someday due to the great projects scaling up in valuation? Is that possible from a numbers perspective?
5 trillion?
That's what he asked.
I mean, that's just table stakes. We're talking about porting the entire system of property ownership of the world onto the internet. To me, like 5 trillion would mean we failed. And I just think that I really do view this as taking the entire systems of world, like global ownership of all assets, and putting those on the internet and creating native internet monies to transact between those assets. So to me, yeah, it's that's very much achievable in my mind. Yeah.
Thank you. And then Paz asks, other than stable coins and scaling solutions and tokenized securities and decentralized exchanges, what do you see as interesting ideas and projects that are coming down the pipe in the next months and years that get you excited?
Oh man, I think cross-blockchain interoperability is really interesting to me as well. So a couple projects in this vein are Cosmos and Polkadot. Cosmos is based on the Tendermint protocol by Jaquan, and Gav Wood is really the core architect behind the Polkadot protocol. And to me, these are really exciting because it means that you could potentially have applications that are built across multiple blockchains. You could have smart contract logic on one blockchain, reference data from another blockchain. And so then when you have these various trade-offs, as a previous person asked, between more of a centralized validator set versus these really kind of hardcore distributed decentralized systems, you could actually have the best of both worlds, right? If you could have interaction across those systems and smart contracts and assets on each of them communicating with one another. So, that kind of cross-blockchain interaction, I think, has a potential to unlock a huge amount of novel applications and use cases. Also very excited about non-fungible assets. So you could imagine, for example, a video game where you have an avatar that is represented by a non-fungible asset that can actually walk across video games. So like you could take your avatar, your custom avatar, and all this, their items like swords and armor and things like that, and move from one game to another game. Because the way non-fungibles work is, developers can, in a permissionless manner, access any of the assets from another game. So rather than me launching my own game from the ground up, I can kind of port onto somebody else's game and say, hey, if you had a sword over here, now you have a sword in my game too. I think when you play that out, it's really amazing what you could see. Like the entire world of gaming starts to look more and more like one big game. Like instead of all these siloed different data structures, when you have one big data structure, it makes the whole landscape look like Minecraft. And so to me, there's possibility there with gaming, but that's just the tip of the iceberg. In the longer term, what we're getting to with that is identity. So you could actually carry your identity and reputation across internet-based applications or financial services or things like that. So that, those are two other areas that I'm really excited about, and kind of I think very long-term trends I'm excited about.
Mm-hmm. And on the subject of identity, what are some political and kind of chicken the egg network challenges that we might need to overcome to get identity actually used at scale on the blockchain?
Yeah, it's really tricky. And to me, it'll probably start with something kind of odd, like, for example, video game avatars. I could actually imagine that becoming like a gamer ID, and then you use that to log into like some sort of financial service, and all of a sudden it's linked to your bank account, and suddenly it's your banking is tied to this, digital identity. So I think it's going to be something like that. There are a couple really interesting projects though, working on digital identities, like Cello, CELO, for example, is a really talented team working on this kind of digital identity problem. So I do think that's like one of the final bosses, so to speak, of the cryptocurrency technology. It's a very hard problem for a lot of reasons, but that is an area that we're looking at really closely.
That's great. I love the video game analogy, and it's kind of funny that if that plays out the way you predict, I mean, we started with Mt. Gox, which was a Magic the Gathering game online exchange.
Yeah. Well,
history could repeat itself with identity.
And right? It's way bigger than video games too. When you just open up the entire data structure of the internet, all of the services built on top of blockchains, or this kind of Web3 stack of technologies, all have interoperable data layers. So I just think that, taking a sword from one game to another game is a really easy way to imagine it. But again, when I'm talking about, what are the types of unimaginable things that will come out of that architecture, I just have a very strong intuition, as many others do, I think, as well, that we will see fascinating novel applications that are uniquely enabled by this technology. They're not just ported from the old world. It's really like a brand new use case. Yeah. We actually we had one of the co-founders of CryptoKitties here yesterday, and he explained to us his vision for Kittyverse and how that's very possible. Mm-hmm. And I ran a game studio myself for 4 years. We had access to nothing like this, and I think the world would be very different. What we would have built would have been very different if we had access to this. It would have inspired me as a game developer. So, I could totally see the future for this, and it's exciting because we tie a lot of self-worth and self-importance to our virtual avatars and to our virtual property. A lot of folks who are hardcore gamers will spend time and money to acquire virtual goods, and then when they go into a different game, none of that's available to them. And so a lot of gamers almost sometimes collapse their identity with their virtual avatar and their virtual goods. And by having a permanent avatar and a permanent identity, that makes it even more powerful for them. Yep, that's exactly right. And I mean, again, so how gamers are like fanatics about the games they play. I'm one of these people. And I really like the Super Nintendo, Nintendo 64, PlayStation 1 kind of era. And just I've played lots of those games a lot of times. I know way too much about a lot of those video games from that era. So but to me it's kind of like there's just so much long-term potential in these kinds of things being built today, and I do think a lot of it will surprise everyone. I really think that's something that I feel very, very confident about.
It's very well said, Olaf. Anything else you want to say before we head off for today?
Yes. Last thing is that both Polychain itself and all of our portfolio companies are aggressively growing and hiring. If any of you are interested in a role at kind of a new emergent kind of cutting edge cryptocurrency project, please reach out to us, because we'd love to put you in touch with the right people.
Thank you, Olaf. And audience, I hope you take advantage of that. Olaf, it was great learning from you. The audience loved it. I loved it. We really appreciate how busy you are and how you took the time to take a stand for coding nonprofits with us today and to celebrate blockchain. So thanks again for all of your time. I learned a lot.
Yeah, thanks for talking to me, Ed.
Great. We'll be right back, guys, with Elaine Shi, who is a co-founding scientist at Thunder, and she'll be explaining the Thunder blockchain. So we'll be right back, guys. Thanks again, Olaf.
Okay, thanks, guys. Bye.